Good afternoon, everyone, and welcome to Simple Steps, modules 4 and 5, where we'll be dealing with finance and funding. My name is Rick Anicetti. I'm a retired supermarket executive, and I've been with SCORE for coming up on my first year anniversary. Um, a couple of housekeeping things before I introduce our presenter. I will be serving as moderator today. Um, you can. It's usually very helpful if people use the chat feature to sort of introduce yourselves to one another, or what business that you might be in, or what business you might be interested in starting, just to get some communication going. Secondly, all of the slides that will be presented today will be will be available and sent to the email address that you provided when you registered. And as far as questions are concerned, we'll take them as they come. And if you could just enter them into the chat feature, that would be fantastic. And then I will moderate that feature and I'll provide our presenter with the questions as we proceed. So at this point, I would love to present our presenter, introduce our presenter. I have some notes here that I am trying to get to. There we go. So I'd like to introduce Helen Ruth Harwell. To many of us and to many that she knows, she is simply known as HR. She is a licensed attorney in North Carolina and Alabama for over 25 years. Her experience is in estate planning, probate administration of estates, and corporate and business law. She is a small business owner running her own firm since 2009 with an undergraduate degree in business administration from Auburn University. She is also a member of several legal, professional, and service organizations. She has been involved with SCORE for quite some time, a member of the National Association of Women's Business Owners, Matthews Women's Club Service League, and a past president of her homeowners, association. And without further ado, I'll turn it over to HR.
All righty. Well, hello and welcome. We will be doing simple steps for starting your business. This is our session 3. I'm not sure how many of you have attended the session 1 and 2, but we'll go from there. And this section, this module covers the financial matters and funding. Let's see. Okay. And if you have a minute and want to, if you want to put your name and your business or business idea and the chat, and maybe whether or not you have attended the Simple Steps 1 and Simple Steps 2 classes that we also offer. Just a little bit about SCORE. We are a volunteer organization. We have about 90 SCORE mentors here in Charlotte. All of the mentoring is free and confidential. We can do business. I don't know about email, it kind of gets difficult, but video and in-person sessions one-on-one with a mentor. If you don't have a mentor, feel free to go to score.org and click the mentor and they will assign one in your area. I believe today we have people from all over North Carolina and maybe a few other places as well. So welcome. And there are, I believe, 8 or 9 chapters of SCORE here in North Carolina. So the system will assign you to the one that is closest to you. We are here in Charlotte and we have about 13 counties that we service in our chapter. We also have community outreach activities and networking activities. And we have in-person networking meetings and workshops every once in a while. One of those happens to be tonight. So I'm putting some information in the chat regarding that. It's at 6 p.m. today in Town Bank, which is sort of near Uptown Charlotte. If you have any interest in attending that, please register with the link that I've just put in here. And if you have any questions along those lines, feel free to put those in the chat. We've already covered, these are all of our chapters here and the score.org. Once you enter your zip code, the system does what it needs to automatically. The one-on-one mentoring and the 3 simple steps classes. The first one is startups and basics. The second one is branding and marketing, which we had a couple of weeks ago. And then today we're doing the financial matters and funding. The next step after you've gone through those classes is to decide whether you want with your mentor and what else you need to do in order to decide whether you want to start a new business or not. And to build your financial plan, the mentors here are willing and able to help you with some of that. Financial plans. We're going to cover why do you need one, what's included in a financial plan, the income statement, balance sheet, cash flow, break even. What are the components of each of those financial plans? How do you maintain the financials? And then we'll move to the funding sources of capital, the 6 C's of credit and capital, what the banks are looking for if you have or are requesting a loan. The goals to figuring out all of that is how much cash do you actually need to start? How much cash do you need to keep going? Do you need outside financing? How much does pricing affect profits? That's an important one. How long do you make before you're going to actually make a profit? Can you afford to wait until you're making a profit? Will you need staff and when will that be? So the financial sort of should be leading your business decisions and helping you make the decisions on how to effectively run your company. So why a financial plan? You've got to test whether or not it's even reasonable that this company is going to make a profit. You don't want to be an accidental nonprofit where you're making no money. And define what revenue, what sales, what are your costs of goods and costs of staff, and to sort of predict what you are going to expect while you are running this business. Identifying the key elements, the startup costs, what funds will be needed to finance the business, and the fixed costs to run the business before you can start to make that profit. You also want to make sure that the business is going to meet your personal goals. You may not want to work 150 hours a week in order to make the goals. So you have to look at the business and see whether it is practical to accomplish those goals, and looking at the finances will help. Long-term financial plan. You want to understand the financial risks and rewards. You want to have a plan for those business decisions. And do some modeling to see what different things might affect your profits and how much your money you're making. And to create sort of the blueprint for how you're going to move forward. The main financial statements that we'll be talking about and that every business owner should have available to them and be able to look at and understand are the income statement, which measures revenue and expenses, your balance sheet, which is your company's total value, book value is what it's called. Your accounts receivable, inventory, and accounts payables are included in the balance sheet. Your cash flow statement. Cash is important. It is king, as we've said in this slide. If you don't have enough cash at some point, at any point really, then your business can fail, because getting cash when you need it is not as easy as getting cash well before you need it. So you want to plan for it and you want to know how you're going to adjust for it. And then the break-even analysis are spreadsheets and financial statements that will help you know when you are going to start making a profit. The income statement. It's also called a P&L or a profit and loss statement. It measures your revenue in and your expenses that are going out for any given period. It could be for a year, it could be for a month, it could be for the entire life of the business. You'll want to look at different periods of time and over a year, see whether the income is seasonal or goes up at certain times or down at certain times. This is a statement that will help you to figure those things out. There's not a single format for income statements. If you're using a bookkeeping software, it will have all of these financial statements. You want the format of it to match your business need and what it is that you need to know about your business. The revenue can include the cost of goods sold, and then you create the net revenue, or you may want it broken out into different types of goods or services that you're providing. The expenses, you want them broken into the expense categories that matter to you. This is one thing that if you're setting up in QuickBooks or some other software, you may want some assistance to know what are the important categories that you need. You also may want to work with an accountant to help you figure that out as well, because some different categories have different tax implications. The best example I can give is that if your meals and entertainment are not fully deductible, so you have to keep those separate so that you know how much that is for the tax returns as well. And you just want these to be as meaningful to you as you can. Marketing sometimes might get broken into 10 different subcategories under that, or it may not be applicable to your business. It's applicable almost to every business because marketing is important. So the balance sheet. Now this measures what your company is worth. You take the assets of the company. Accumulated value is sort of may or may not include some depreciation for the assets. The liabilities, those are the company obligations, the debts, the bills that you owe, and then any loans that you owe as well. Equity is how much money you have in an ideal world if you were to sell it, but book value and sale value are not always aligned. It sort of measures one point in time. So at any given time, what the profit or the assets and the liabilities were. There again, you want to match your business's needs for when and how you look at this. Cash flow projections. So this is incredibly important because you don't want to run out of cash or have trouble paying your bills, because once you get behind, it is very difficult to catch up if you weren't planning for it. So the cash flow projections, they'll measure the movement of cash that comes in and out. And down at the bottom, it has the net cash flow and the cash balance. You never want that to go below zero. Really, you probably want a bigger cushion than that as well. That includes the P&L, non-P&L items, which might include new cash and investment. It includes loans and advances, assets and purchases, and loan repayment. Because there again, you do not want to default on the loan, and that is not included in the profit and loss statements. But this will help you figure it out. And just so you know, we do have some great resources with SCORE. And most of these can be found, or at least a format for them in Excel can be found on our website, and I will add those links in just a little bit. So then you also have a break-even analysis. This tells you at what point am I going to have made enough money to cover all of my costs. That includes the costs of the goods, the costs of the staff, the costs of the marketing, It also would include loan costs and what you put into the company so that you know if the company is worth opening and running and if you are going to start making a profit. You also need to look at this to see personally, can you survive and have enough money to live your life before you start taking money out of the company? In some cases, this break-even analysis, you would want to include your salary. In other cases, you may not, just to make sure that you have enough there again to live on and to run and operate the business. So some other components of the financial plan include, what do you need for the startup funds? If you're going to have equipment or a business, or you need inventory to start with, all of those items are necessary to determine what you need in order to start and what expenses you're going to have, insurance and all of that. Your sales volume. You also want to predict to the extent you can, and a lot of this you would want to do research to see what other similar businesses are doing so that you can predict some sort of sales volume. Whether it's services or products, you need to know how many you're going to sell, what is the cost going to be, how much revenue do you need to earn. So that will help you determine the revenue along with the costs of the goods and the prices that you are going to be serving. Sorry, I skipped ahead. The salaries and wages, what are you paying yourself and all of the staff and agents and independent contractors and employees to help you make all of this happen? Then you have fixed operating expenses. So that's going to be things like your rent, and other things that don't change each month. Then you're going to have variable expenses, and those change depending on what your sales volume is. Then you also need funding and cash receipts and disbursements financing. So now we're going to go through each one of those in a lot more detail. Required startup funds. How much do you need? You want to create your business. You've got equipment, deposits, utilities, last month's rent, all of that sort of expenses. Then you also need to pay for a lot of other things like your initial inventory that you're going to be selling, and all of the expenses before day one are your startup expenses. You may also have some marketing, some legal, insurance expenses, accounting expenses, all before you've even opened the doors. You want to be able to cover these early losses and to know when it's going to happen. And caution is key. You want to control those expenses because they do have a tendency to grow and become out of control. And you need to know what that's going to be. You also want to forecast the sales revenue of what your business will generate. You want to project the volume. Sometimes you do this by product group or service levels. I know he introduced me earlier. In my world, I sort of break it down of what is a business client, what is an estate planning client, what is an estate administration client. And I track what I am expecting from each of those different classes of services that I provide. Others might be doing, if you're a bakery, it's like how many cakes versus how many cupcakes. And then you want to do level of resources of what you will need as far as your staffing, materials, and equipment. Then based on your business, you might need to require some additional work to figure out all of these. The libraries also have a lot of good resources. We at SCORE have some great resources, and templates will help you to think about some costs and expenses that you may not be expecting or may not think about. So I'm going to put that in the chat, and there's two different links. One is for our local chapter SCORE, resources, and it goes strictly to the templates and resources. And then the second one is directly to the financial resources that include Excel formats that you can help to create some of these reports that we've been talking about. Revenue is an outcome. It's linked to sales. It's linked to your product mix, your expected volume, your pricing strategy. Are you going to go in low? Or are you going to go in high? The market competition, what's going on in the economy. Some of these things you can control, some of them you can't. But you do want to at least have an idea of what to expect. Salaries and wages, those also go up and down and can vary significantly for a business. But you want the salaries and wages to be related to the activity of the staff and to sync with the volume of the revenue. Now, sometimes you get a little ahead of yourself and you have enough staff because you're planning to grow and you need the staff there and ready to manage the clients when they arrive. Other times you may want to be running lean and mean and not add the staff members until you have the revenue to adjust for the volume. It's sort of a stair step. You're always changing and making those adjustments. Don't forget to include yourself. You need to get paid as well. You want it to be a true picture of the business and the economics so that you know what your value also brings to the table. You want to use realistic market wages for the area that you are in. If you're in California, it's going to be higher. If you're here in Charlotte, it's probably in the mid-range. If you're in some of the rural areas, you might have lower wages. And then don't forget to include the benefits and taxes. I've always heard, and I'm not sure if this is accurate, but that if you take somebody's salary and then you add about a third to it, that is maybe the true cost of that employee. Because, and this is somewhat true, and if you don't offer too many benefits, but there is the extra taxes that the employer has to pay, plus health insurance, other things. All of it increases for every single staff member that you have.
HR, a couple of questions.
Okay, great.
When looking for a commercial lease, is it necessary to provide a detailed overview of estimated revenue and P&L, especially if it's a new business?
So that really depends on the landlord and how they are going to calculate your rent. In many cases, the landlord doesn't care as long as you have good enough credit and you can prove that you can pay. But they probably do want some of these financial statements to know that you're a good risk. Also, in commercial leases for small businesses, most of the time the landlord is going to ask you for a personal guarantee. So they're going to be looking at both your credit and the business credit when they're deciding whether or not to rent to you. Also, there are some leases that the amount that you pay is dependent on your revenue and your profit and loss. A lot of them are tied to revenue so that basically the shopping center or wherever you are is saying, hey, we're bringing you all of these customers. So if we bring in more customers because of all the other tenants in the place and what we've done to our shopping center, we want to share in that profit. So therefore, they will require you to provide them with your financial statements and information periodically so that they can determine what the rent value will be. And did you have other questions?
Yes, I was going to, before I ask the next question, I would just add, in almost any instance, if you're going to be borrowing money, you're going to have a financial plan, because the bank is going to want to see that you've got the capability of being able to pay back that loan. The next question is, as a handyman service, I don't know how to pay myself separate than the business. Don't know how to tell if we're at a point that I get paid separate.
A lot of that depends on your legal classification and type of business. If you're a sole proprietorship, you probably just want to track when there's money in the account. I advise, and even if you're a sole proprietorship, to have separate bank accounts, one for the business so that you can track what comes in and out, what's going to be deductible for your accountant and for your tax purposes, and what's not, and what the actual income is. At any time that there is extra money and you don't think you're going to have to loan it back to the company the next week, that can be considered your payment if you are an extremely small business sole proprietorship. If you are, and that includes LLCs that are single member LLCs. Now, you are required to keep the money separate if it is an LLC versus a sole proprietorship, and you need to follow those formalities of keeping the company separate to maintain the limited liability protection. But if you are an S Corp, it is incredibly important that you figure out how to pay yourself, and you need to probably be on a payroll service and have salaries and wages and receive a W-2 at the end of the year. And you should work with your accountant to decide how much of the income or the money that is available to pay you should come out as your salary. There again, you're going to look at the general salaries in the area for people doing what you do who are not the business owners. And then you may be able to pay a little bit less tax on the amount that's over that you could distribute from the company to yourself. So hopefully that makes some sense.
Yep. One last question at this point, and this relates back to the question concerning whether or not a commercial lease requires an overview of estimated revenue and a P&L statement.
Mhm.
What if you want to build a building to start your business?
So depending on what money you have to do that with, I generally recommend that the building and your ownership of the building itself, you may want to talk with an attorney and your CPAs about owning that as a separate entity or a corporation. Often we create LLCs that will own the building and then rent it back to your business, just as if your building company that you have created that owns the building would be the landlord for your business. And that is a good way to think about those expenses. And a lot of those expenses are sort of different, and they're almost are sort of different businesses. There are a lot of reasons to keep the liability separate from the building versus the actual ongoing business.
HR, thank you for that answer. I just learned something.
Excellent. All righty. So we will go back to fixed operating costs. The fixed costs are in this bottom section, and I keep hitting that with the mouse. Those there again are the rent, the utilities, the costs that come in every month, no matter what volume you do. Then that includes your phone, your utilities, your insurance, and you want to, there again, maintain some control over these costs because they are your hurdle for getting to where you are breaking even. Then you've got the variable costs. Those are the ones that change depending on how much services or products you are selling. That includes commissions to salespeople, your materials, your packaging, your marketing, your shipping expenses. These vary by every type of business, and they may not vary on a one-to-one, you bought this, so therefore you make one more dollar. In an ideal world, the variable costs are lower than the price that you are charging for your services or your business. Do you need an accountant? Well, my personal opinion is everyone needs an accountant and a CPA. But yes, some people do it without and can do all of it on their own. It is very helpful to have an accountant at the beginning of your company so that you can have them help you decide how to set some of these things up. and whether or not you are an S corp and you need to do that payroll. That's a tax requirement to do that. So, and what your taxes are going to expect. The first year, a lot of people don't set aside enough for taxes. I often advise some people to literally have a separate bank account, start putting some money in as you're making it so that the next March you can pay it, or you can start paying quarterly withholding or quarterly estimated taxes as well. You can keep your own books. QuickBooks is a great tool. That's what I personally use in my law firm. I think now they're only the QuickBooks Online. It used to be a desktop version as well. When I set up my firm, I actually got my accountant to recommend a bookkeeper who came and helped me to create the categories that were going to be important to me so that as I put in an expense or an income, it all matches up and I can choose what category and what class of client it is so that I can track the things that are important to me. I find that bookkeepers are fantastic at helping you set that up and to also teach you how to use it. I had used what they call Quicken for personal things, which is more like a checkbook register. QuickBooks does the double entry accounting for you. And I'm going to be honest, I don't fully understand that. So having somebody help me set it up so that I could be consistent and the information coming out of it in the reports and for my taxes was accurate. There's a bit of a learning curve. I think QuickBooks Online actually has some resources and they can connect you with bookkeepers, I believe, for a fee. There are lots of other accounting softwares. You can also, if it's a really small and you're just a sole proprietorship, you can use Excel. As long as you can sort of set it up so that it will track all of the income, all of the expenses, and the things that are going to be important to you. You've got to make your books a priority. Actually had some clients at one point who had not made their books a priority. They didn't know whether they were making a profit or not. They didn't know whether they could afford to continue the business. And it also put them behind for 2 years on their taxes. And then when they had to pay the taxes, it was a shock and it caused a lot of problems. So not having or not keeping track of your expenses and your income can be disastrous for your company. And in some cases, it can cause you to close.
A couple more questions,
Okay.
HR. Are you aware? I'm not. Are you aware if there is a score session that speaks to the different structuring options, partnership or S corp or all of those particular options and the liabilities of each?
I am not. I have done that before in the past. And I think that we do have a session or through the Charlotte score that is going to have some legal and accounting. I believe that may include a lot of the information that you're asking for there.
Mm-hmm.
I don't remember exactly when that event is happening, but it's sometime in February or March, I believe.
Yeah, and this is always a good reason, a precise reason to have an accountant, because they're going to be able to explain that to you very clearly based on your specific situation.
Yes. So I have a lot of clients that run around who want to set up a company. I actually won't advise them as to whether it should be an LLC or a corp, an S corp or a C corp, because I don't know all of their finances. Now, just because somebody is setting up a company that does the exact same thing doesn't mean that the LLC, S corp, C corp classifications are the same for both of those businesses. I think I had, somebody who does sort of a experience-based business, and they ran around and asked everybody else which they should be and got some different answers, but there was sort of a consensus. So they were going to go with that. And then they talked to their accountant, and their accountant was like, based on these other needs for yourself, I want you to be an S corp. So you really want somebody who knows your numbers, your personal numbers, and the company numbers. There's a lot of tax advantages to being an S corp, but they do complicate things and require that payroll. So you've got to have somebody who's going to debate that with you The classes that we teach would not answer that question because it's very independent and depends on personal circumstances.
And one other question, are there payroll services that you all recommend or that partner with SBA from referrals that work with small businesses?
I don't think that we have any on our general recommendation list. I personally use ADP for my company. Some CPAs and accountants will do it. Be very careful with the fly-by-night places. Because I did have one client who they didn't pay the taxes and the withholdings like the payroll company was supposed to. So that can cause significant problems. Basically, they stole the money. But the
Yeah,
banks used to do it, but I think they all got gobbled up by ADP. So
yeah, there's also, because I'm familiar with this, having run a business after I got out of the food business, and it's called a PEO. That's P as in Paul, E as in Edward, O as in organization, professional employer organization. And what they do is they pool many small businesses, and can, if you're going to provide employees with benefits, it's difficult to do that if you're a small organization. If you pool with all of these folks, they can provide you with much more cost-effective insurance plans. They'll do a lot of your HR work, and they can actually represent you in courts if that's required.
yeah, and the HR work of all of the requirements for onboarding employees, you've got some tax forms that need to be filled out. They can also help with that. There are some resources on ADP to help with it as well, a little bit. Somebody also asked the difference between a bookkeeper and an accountant.
Right.
So an accountant typically would file tax returns. A bookkeeper is somebody who's going to enter the daily information into your financial software. And then you've got CPAs who are certified public accountants, and they have basically they're accountants who have gone through school and also taken some tests and are a little bit more proficient in the accounting world. And typically they are more willing and able to provide more advice than just like somebody like H&R Block or somewhere. They're going to file your taxes, but they don't look at the whole situation to provide advice.
Yeah, as a small business, you might have a bookkeeper as an employee, but typically a small business is outsourcing an accountant.
Yeah. And you may be your bookkeeper if
Right,
you're the one inputting it into the information.
right.
So, all righty. So we will get back to the financials. Larger businesses definitely need accountants and CPAs, and sometimes they have those in-house as employees. Sometimes they also hire outside resources. Yes, you can keep your own books. Like we said, QuickBooks works. There are other accounting softwares, depending on what industry you're in. There are some industry-specific softwares that will help you keep your accounting books. Or if you're super small, an Excel spreadsheet sometimes works. Okay, financial statement analysis. You want to pull these statements on at least a monthly basis and review. What happened last month? Do I need to make any adjustments in the business to improve things? Is it just a cash flow issue when somebody didn't pay, so maybe, make it up in the next month? You need to look at that. You want to look at your ratio analysis, your accounts receivables and your accounts payables, and sort of have some benchmarks to see if you are on track. The accounting records we've already talked about. You can do manual. You can also use just pen and paper. It'd be a lot of paper if you have lots of transactions and money coming in and out of your accounts. Choosing the system, hiring the bookkeeper, or you're going to do it yourself. and training and educating you on what the finances are. Even if your business has nothing to do with finances and accounting, you need to know it because you don't want to be taken advantage of, and you're the one that's needs to be looking at what's going on in your business. Very hesitant to depend on somebody else to do that because they just don't care as much as you do. Now then we're getting to funding and cash flow. What are the funds that you're going to need? What is the available owner's capital? Owner's capital is the money that you're bringing to the table. Do you have the availability of credit to be able to get loans? Or in some cases, some businesses use credit in buying inventory. And their vendors basically are their lenders in a way. What are the needs? Some businesses require significant capital, some don't. We've already talked about the owner's equity in your investment. That is the money that you are putting in initially for the business. You do want, if it's a corporation or an LLC, you do want that to be somewhat significant and realistic for some of the startup expenses, as that is one of the factors that the courts will look at if they're going to pierce the corporate veil, which means tag the owners for the liability if the company gets sued for something. And the whole purpose of setting up corporations and LLCs is to avoid that. That's not in our PowerPoint, but just goes back to the why would you set up the different types of companies? What kind of savings, insurance, investments? Do you have family and friends that are going to help you with the business and the money that you will need to run the business? Are you going to get a home equity loan? Are you going to get, sometimes you've got some unsecured loans, banks and credit unions, and we're going to talk further about that. Then you've got credit cards. Remember, credit cards are at a higher interest rate, so those you don't want. You also, are you going to take on partners that would bring money to the table? You could sell some of the stock or the interest in the company. You can also get some government grants in certain limited circumstances. Some of the bank loans and non-traditional loans that would be the SBA guaranteed loans. So the way the SBA loans work is that you go to your bank and apply for a loan, and then they look at the loan to see if you are a candidate for an SBA loan as compared to a conventional loan. The SBA loans are loans that the Small Business Administration, federal government, basically is guaranteeing to the bank that if you default, they will help the bank cover some of the losses. So that's why they work out in for small businesses, is because sometimes the banks wouldn't necessarily want to lend to the small business without that guarantee. But you don't actually go directly to the SBA. That being said, you can go directly to the SBA's website. They do have a lender matching tool that is fantastic, where they will send the information that you input to potential banks. You may want to shop around from different banks. Usually your bank is the best place to start because they know you and you want to grow your relationship with the bankers. Then you've got the Department of Community and Economic Development. That is another situation where they're sort of guaranteeing loans or helping loans for some people that may not get traditional bank loans. The Department of Agricultural and Rural Development, if you're in a rural area or your business relates to agriculture, they are extremely helpful and have lots of resources as well, and try to hook people up with loans that are somewhat guaranteed by that federal agency. Angel investors and venture capitals, those can be hedge funds, they can be other investors. And the angel investor just means it's somebody who's coming down as an angel to help you out. Pay attention to the costs of those loans. Some of them are great and are very helpful. Others have really high costs and expenses. Crowdfunding as well. And then there are some merchant and service day loans that are almost like payday lenders. some of those, if they're going to be getting some of your revenue off the top, they can create some logistical problems with the cash flow of the company as well. So just pay attention to the costs of the loans. The SBA guaranteed loans, if you go to sba.gov, like I said, there is some fantastic information there, including the lender match. Federal government grants. I actually looked at this the other day to see what was there. They list all of the grants that the federal government is handing out. Don't get your hopes up. You've got to be in certain categories of certain businesses or in certain locations. If you're in an economically disadvantaged area, and that could be somewhere within a big city or it could be rural areas, then if your business is going to be located there, there are more grants for those kind of areas than there are for others. Lenders and banks, what do they look for? What's going to be in the application? They want good credit. Unfortunately, that's sort of required. And they don't just want good credit for the company, they want you as the owner to have good credit, because they're probably going to require a personal guarantee from you, which says even if the business fails, you're still going to pay them. Management and expertise and commitment. They want to know all about whether you have the expertise to run this business. Years ago, I was talking to somebody who was going to open a restaurant. They went to the lenders, and even I think they were looking at an SBA loan. And they said, you have banking experience. You don't know what a restaurant is. Go and manage a restaurant first and then come back to us. They also are going to look at the feasibility of your plan. Now, the business plan, it's going to include all of those financial components that we were talking about earlier. It's also going to include sort of narratives as to really what you plan. It probably also includes a marketing section and a staffing section, and they want to know as much about your business as they possibly can so that they know that you know what you're doing and that it's going to be successful. They want to make sure you have enough money in the game. Every once in a while, we'll get a call from somebody who's like, I don't want to invest my own money. I don't have any money. I want the lender to pay 100% financing. That's just not realistic, because the lender wants to know that you care and that you're going to make it happen and that you're the one that's going to get hurt first before their loan doesn't get repaid. They're also going to look for sufficient capital. In many cases, SBA loans and others will require not only the equipment, furniture, accounts receivables, and other assets to secure the loan. They may also require the building, or they may require a mortgage on your home, because they want to be able to collect that collateral if you become in default of the loan. The other things that the lenders are going to look at are the 6 C's of credit: your character, capacity, collateral, capital, conditions, and cash flow. Your character is, are you trustworthy? Do you have a business or a personal credit history? What is your credit score? Do you have integrity? Your quality of your references. They often do ask for references, and your experience in the business, and generally the impression you make on the person that you walked in and talked to, that is the lender or the representative and the person at the bank that's going to help you get the loan. That's why building that relationship with the bankers often is helpful. They want to know your capacity to repay the amount that is borrowed. They want to know how soon can you generate the positive cash flow. So that goes back to those break-even analysis. They're going to be looking at those very carefully. When are you going to show a profit? How large of a profit are you going to have? Are you going to have enough of a profit to sustain the business? Capital, that is there again, the money that you have put in and your ability to save money and accumulate extra equity in the business. We've already talked about the collateral. That is their secondary source of payment if you cannot repay the loan. Third-party guarantees, that's probably what we talked about earlier, where you're going to have to personally guarantee the loan. They're going to look at the tangible assets, the property, the equipment, the accounts receivables, the inventory. Once they get a security interest in things that are not real estate, such as the equipment, accounts receivable, inventory, furniture, and fixtures, they will often file what's called a UCC filing. It's really covered by the Uniform Commercial Code, which is what UCC stands for. They will file that with the Secretary of State in North Carolina. And that essentially tells the world, hey, you can't buy these assets because they have a security interest in it. And it puts the world on notice that you don't have a right to sell that or your business assets essentially to someone else. In situations where I'm doing asset purchases for companies, I actually went and looked at UCCs yesterday, trying to check to see if a client or the person they're buying the business from had the things that we're buying secured by somebody. Because if we bought it and it's secured by a UCC filing, then we might have to give that back to their lender. I just wanted to cover that because a lot of people don't know what UCCs are or how those assets end up being secured.
A question.
Sure.
How do we build business credit as a new business?
It's a challenge, and a lot of it is getting credit for things that you might not always get credit for. Sometimes doing the telephone, if your cell phones, that's one way that I did for my personal business, was I got an account with the telephone company, and they often report to some of the things. So your utilities, your rent, also getting a very small credit card at the bank in the name of the business will help to grow that track record that they're looking for. I believe you can even get prepaid credit cards to a certain degree, similar to individuals who are trying to rebuild their credit. But it does take a little bit of time. And that's always the challenge, is a lot of the traditional lenders don't really want to lend to startups because it is a higher risk. They want to see that 2 or 5 year track record, and then they're a little happier to lend. So it does make it difficult.
One other question. When you have a personal service business, for example, a therapy practice, would most loans require third-party guarantee since a personal service may not have inventory or equipment?
Yes. And also, just so you know, credit cards, a lot of times when the business gets a credit card, in some of that fine print, you as the individual owner are guaranteeing and providing a third-party guarantee for the credit card as well. It's sort of in the very fine print as they're signing you up for the credit cards. I would imagine
Again,
almost all lenders in a service-based business are going to require the owner to personally guarantee. And a lot of times landlords will, unless there's a significant track of credit.
Right. This is one area where if you're forming an LLC, you often don't have that limited liability because the bank will require you to take out a personal guarantee.
Yes.
So even if the business fails, you're still on the hook for that loan.
Yeah, the limited liability does not cover things that you either promise personally to pay or that you have a guarantee that you will pay, which is really why they ask for the guarantee.
HR, would you recommend putting vehicles in the business name to help build business credit?
That is also one option. I would want you to talk to your CPA and your insurance agent, because I believe that they do charge more for vehicles that are owned by a company because they're worried that multiple people will be driving those vehicles. So depending on the circumstances and whether the credit is more important than the insurance cost. You just have to weigh those out. But yeah,
Um,
buying a car would be a good way to help to build that credit.
uh, HR, would it be accurate to say, correct me if I'm wrong, please, if you buy a car for a business, you're going to have to demonstrate that that car is being used for purposes having to do with the business and not personal use. Is that correct?
There are lots of requirements for taking a tax deduction on your income tax return for cars, whether they are purchased and owned by the company or individually. And that depends on a lot of factors that you want to go over with an accountant or CPA
Mhm.
that's going to be filing it. It's the same thing with the home office deduction. You really want to pay attention, and depending on your risk tolerance for dealing with the IRS, mine is very low, as to whether you want to take those deductions and how far you want to push it. But you do have to track how much time the business is using it versus personal use, which often becomes a pain in the butt. So, terms of loan.
And
Oh, yep,
one
go ahead.
other one other question: how would you obtain a net 30 credit for new business?
That depends on the vendor that you're dealing with.
Right, right.
Every vendor is going to have different rules, different requirements. There again, you may want to avoid the personal guarantee if you possibly can, but it's completely up to the vendor as to what they want to require. So, terms of loans often depend on the purpose of the loan. Going back to the situation where somebody wanted to own land and build the business location premises, they're going to probably go for a longer period of loan, maybe 15, 20 years on those kind of loans, versus if it's a loan secured by furniture, fixtures, equipment, they might only have like a 5 or 7 year term. Sometimes those loans also have a balloon payment. So you're paying, it's amortized over a longer period of time, but at the end of the 5 or 7 years, you suddenly still owe this and you have to refinance. Pay attention to that, because every once in a while, like in the hotel situation, somebody offered a loan under those terms, then it ballooned, and then suddenly that bank decided it didn't want loans to hotels anymore on the 7 year mark, so they had to go find a different lender. So just be aware of the need to refinance and how it's amortized and what you're going to owe. They should, just like when you're buying a house, provide you with an amortization schedule that shows all of that regarding the loan. Terms of loans, what the interest rates are, all of that is highly dependent on many different factors. It's not just you're buying a house for this much, so most lenders are in this range. Business loans also are not covered by a lot of consumer protection laws, so the interest rates can be insane. And you just need to, and the terms of the loan, because the law in the court believes that business owners should protect themselves and can contract for what they want to, and they're not as worried about looking out for you as they are for consumers. You had a question?
Yeah, one last question. No, well, not one last, but a question I have right now. I'm assuming that this individual, while owning their own business, also works for an employer. So the question is, would you combine my employer's W-2 along with my business taxes when filing taxes?
So typically, if you're a sole proprietorship, your business taxes and income and deductions are going to be on what's called a Schedule C. And it'll list out the income and some of the things that are deductible. that Schedule C is attached to your personal return, and the number at the bottom of that schedule gets put on the front page or second page of your federal tax return. So it gets combined on the forms itself. So hopefully that makes sense. Cash flow. There again, they're going to look at where the money's coming from, how you're going to be able to repay it, where is all the money going to go, are you going to keep a cushion? They may have some requirements as to how much you do or don't pay yourself, because they don't want you pulling every bit of the money out of the company and not repaying them. Credit reports. They often want at least a 700 or greater on the FICO score. And your personal credit reports, you can obtain them once a year from annualcreditreport.com or I think Credit Karma. Now, when you go to those websites, be a little bit careful because they try to get you to sign up for credit protection or something that you're going to have to pay for. But you are entitled to get it from each of the 3 credit bureaus once a year for free. And there is a way to do it. You just have to navigate, not sign up for something that you don't mean to sign up for. Bank loan applications, they're going to include your cover letter, some of your financial needs. How much money do you need? Your financial statements, typically they're going to look back 3 years for statements and tax returns. Your cash flow projections for at least 12 months, if not further out to that. Are you going to be profitable or not? The break-even analysis. They're going to want to look at your collateral, both the personal and the business, your personal tax returns, your personal finances, and your resume to know whether or not you know enough about this business to make it a success. Also remember, the more lenders you go to, the more times they pull your credit report, it will adjust your credit score, even your personal one. Additional questions that the lenders will probably ask, do you have any liens, judgments, any tax issues? When's your tax return due? Are the payments up to date? Are you doing the withholdings? What are the pledged assets? Sometimes they will actually ask for life insurance to be pledged as security for a loan. And they're going to need to know the face value and the cash value, which has to do whether it's a term life and policy or a whole life. In certain situations, they basically, if your business is solely dependent on you, they want to make sure if something does happen to you that the loan is covered. And what are your personal expenses and income? Why are the plans needed? So that they can cover the accounting, the bookkeeping, the 6 C's of the credit, the banking relationships, and your sources of capital. So that covers the meat of what we were going to discuss today. The business readiness self-assessment is meant to help you figure out whether you want to move forward in your business or not, if it is a startup or a business you are considering. And this is an assessment that you can do to help you make that decision. We've already covered the Simple Steps classes. If you haven't taken the Business Concepts and Marketing or the Startup for Basics, I find that they were fantastic. When I first joined SCORE as a mentor, they required us to go to these classes. Even though I was a business attorney, owning my own law firm for several years, I still learned things when I went to each of those classes, and I thought they were very valuable. And hopefully you found today very valuable. You can also go to score.org, or you can take a picture of this QR code to sign up for a mentor. And we enjoy our volunteering time, so we do want to help you to figure out your business and walk through it as a mentor. Our goal is often to have ongoing relationships with you to help watch you and see you as your business grows. SCORE is in a situation where we were mostly funded by the SBA and the federal government for our central funding. Again, everybody here in Charlotte is a volunteer, but the systems that we use, the ability to use Zoom for this workshop and the registration systems, all are things that we need support with. And we do have expenses here at the local thing. We are asking that since our funding nationally has been cut off, they have been encouraging us to charge for these workshops. We really don't want to here in Charlotte to charge for the websites. So we are asking for you to consider making a donation. And those donations will support our mission and to help us provide these webinars for little or no cost. And we appreciate that. I believe that this is a video.
I want to take just 1 minute to say thank you for joining us today. We know your time is valuable, and we're honored you chose SCORE to help you grow your business. Now, SCORE has always offered these webinars free of charge. But here's the reality. Due to changes in federal funding, some of our support has been delayed or even cut. And while we're committed to keeping these programs free, we need your help to do it. Think of it like this. 6 Today's webinar gave you real value. Maybe leave us a little tip, the way you would for a waitress who gave great service. Or maybe you want to give forward so the next entrepreneur can benefit just like you did. We're only asking if it's within your means.
All right.
If not, please just keep learning and growing with us. But if you can give
I have one last question, if I could ask.
$25.
Yeah, we'll take questions after.
It will be directly helping us keep these webinars free for everyone. There's a secure link in the chat. It takes less than a minute to make a difference. Thank you again for being here, for your energy, and for supporting SCORE's mission to help entrepreneurs thrive.
Thank you. So I'll put that link in the chat as well. And now I will stick around and answer questions for any of those who want to, but the main portion of our presentation and workshop is completed.
So I have a question for you, HR. I obtained my EIN number as a sole proprietor, but I feel I made the wrong selection. Can I change the EIN or my organization structure? Which would you change?
So there may be a process that an accountant could help you with adjusting it, but in order to form the LLC or the corporation, you're going to need to file some documents with the Secretary of State to create that entity. Typically, you would apply for a new tax ID number, but we've been talking a lot about credit today, so that may not affect it. There may be an IRS form that will allow you to sort of move it from one entity to another, because when you go from a sole proprietorship to an LLC or a corporation, you are really forming an entirely different company at that point.
I would ask for any remaining questions. I don't think we have any currently.
I've enjoyed this and really do thank all of you for showing up and being here today. And remember that there is that big mixer tonight. If any of you are in Charlotte and available, it is a great way to meet some of our mentors and also some of our other business owners that are having the same exact challenges that you are. It is amazing, even if somebody's business is completely different than yours, a lot of the challenges, especially with accounting and finances and marketing and legal issues and insurance, are all the same, no matter what kind of business it is.
And there are lots of thanks to you, HR, for the material and your presentation and answering the questions. And I just want to thank you as well.
Well, thank you. I have enjoyed it. It's been good to work with you.
And take care, everyone. I hope you have a wonderful day. And for those that can attend the Big Mixer, I think you will find it very informative as well. Thank you and take care.
Thank you. Bye-bye.